What is up guys, my name is Ignas, welcome back to the channel. Today we will be taking a look into Taiwan Semiconductor Manufacturing Company, ticker symbol TSM. Last week was really decent as the stock was running into earnings and it was up 12.5% going over $140 per share. So the stock is now up 7% for the year and we are currently very close to the 52-week high, which is now at $145. But TSM really didn't do much in 2021 as the price was going sideways for the whole year, and just 3 months back being real close to the 52-week close at $107.58. The stock is right now valued at 35 times earnings, and they are paying a dividend, which after the recent surge in price is at 1.33%. So to get a better understanding on TSMC, we will take a look into the recent earnings, then how the company is reinvesting back into growth. After that, we will check into fundamentals and financial ratios, then analysts' expectations for this year, we'll check what Superinvestors are doing with the stock, and lastly look into the technicals of the price chart. I hope that this will be an interesting stock to look into, so let's start. Fourth quarter results were released on Thursday of last week, and Taiwan Semiconductor stock breaks out after earnings beat. On bottom line, TSMC earned $1.15 per share, up 19% year over year, and thus beating analysts' expectations by 3 cents per share, where they predicted earnings of $1.12. And then guidance for the next quarter is also great, as Taiwan Semi expects to generate revenue from 16.6 to 17.2 billion US dollars. So even on the lower side, that will beat analysts' expectations, currently at $15.7 billion. The CFO for Taiwan Semi says that moving into first quarter of 2022, we expect our business to be supported by a high-performance computing-related demand, continued recovery in the automotive segment, but he also expects a milder smartphone seasonality than in recent years. Another interesting part is that they are heavily investing back into the business. In 2021, they spent $30 billion on capital expenditures, and in 2022, they plan to expand and upgrade its production capacity, spending an additional $40 to $44 billion. Last Friday, Debbie Wu came out on Bloomberg, talking about those $40 billion for TSMC expansion. This is what she had to say.
TSMC is spending as much as $44 billion this year to expand capacities so that they can capture growth from the multi-year mega trend of 5G and then high-performance computing applications. And most of its spending will be used to develop advanced technologies, including the most cutting-edge 2-nanometer chips. So that way they can maintain their leadership against major rivals, including Intel and Samsung. Its spending is actually as much, at least 40% higher than what Intel plans to spend this year.
So TSMC is determined to reinvest back for more growth, but now let's take a look what was their performance for the last 5 years. So what we have now is their 5-year revenue history. Back in 2016, they were bringing $27.4 billion in revenue for the trailing 12 months. Then in 2017, that increased to $30.9 billion. In 2018, that was at $34.8 billion. In 2019, it decreased a bit to $33.1 billion. But after that, we saw only continuous growth. For 2020, revenue increased to $44.37 billion, and now in 2021, revenue for the trailing 12 months is reported at $55.9 billion. So there was a small slump back in 2019, where quarterly revenues was under $10 billion, but by the end of 2019 that went over $10 billion, and from there on each quarter is already over $10 billion. Now let's take price to earnings, and this is the history for the last 5 years. So back in 2016 it was at 12.5, then in 2017 as the price increased, it went up a bit to 15.64. In 2018 the price decreased a bit, so the PE went lower to 14.75. As the price kept on increasing and earnings stayed flat, in 2019 the PE was at 24.43. Then for 2020 the price kept increasing more than earnings, so we had the price to earnings at 30.58, and with the recent surge in price to the 52-week high, we now have a price to earnings at 34.76. So pretty much as the price kept on continuously increasing and earnings lagged to catch up, We are now left with the highest price-to-earnings ratio in the last 5 years. Now let's take a look into the shares outstanding, but there's really not that much to check into. In 2016 they had it at 5.18 billion shares, and going through those 5 years into 2021, we are still left with the same 5.18 billion shares. There was some sort of an anomaly back in 2017, where the number of shares outstanding decreased by 6 million, but then for the next quarter 3 million was added back in, and after that there was not much change. Now let's take a look into the dividend yield. So back in 2017 it was at 3.18%, then as the price remained pretty much flat and the payout increased, in 2018 the yield inched up a bit to 3.59%, then in 2019 it decreased a bit to 3.23%. As the price kept increasing more than the payout, in 2020 we had a yield of 2.78%, then by the middle of 2021 the yield was already at 1.49%, and it was recently increasing just a bit, but with the last week's surge the yield now dropped to 1.33%. So out of the last 5 years there were 3 where one could have easily locked in a dividend yield of over 3%, but as of 2020 it went under 3, and by the end of 2020 even under 2%, which means that buying the stock right now would lock us a dividend yield of 1.33%, which is unfortunately the lowest it has ever been in the last 5 years. To check on the yield further, I've added the 5-year dividend yield history into my Google Sheets table. So in the last 5 years, on average, TSMC paid an annual dividend of 2.97%. As mentioned already, for almost 4 years it was possible to buy the stock over that 5-year average, but buying the stock right now means that we are locking a dividend yield, which is currently almost 52% under the 5-year average. Meaning that considering dividends, this may not be the most best time to be buying into the stock. Now let us go to Yahoo Finance and check on where analysts think the stock price should be in 1 year. So we have 10 price targets of analysts. They range from the lows of $125 to the highs of $208 per share. The average is at $145.71, and the current price is at $140.66. So analysts predict that in 1 year the price should go up for 3.6%. Let's also take earnings estimates. So for this year TSM is at $4.12 per share, and next year analysts predict earnings at $5.03. If the price to earnings ratio remains the same, then the increase in earnings would result in an increase of the share price of 22.1%, which is way better than those previous price targets. So what are Superinvestors doing with the stock? TSM is currently a part of 7 portfolios, 3 of those have added into their positions, 2 trimmed, and 2 more kept on holding. Wedgwood Partners almost doubled their positions with an addition of 77.74%, currently holding over 200,000 shares, making up 3.31% of their whole portfolio. But it seems that the Sequoia Fund had the largest addition. They are currently holding 2,484,000 shares, and they recently added almost 20% into it. This means that they have added around 400,000 shares, which at the current price of $140 makes an increase in the position of over $56 million. But then the largest reduction is by First Eagle Investment Management, where they reduced by 1.53% and are now holding 9,616,000 shares. So they did trim their position of around 150,000 shares, which is a reduction of over $20 million. All in all, we could say that Superinvestors have been buying more than selling, but the price has been going sideways for a year, and that could change quick with the price recently moving up. Now let us take a look into the price chart. So the stock has been moving sideways for a whole year, going to $125 for around 4 times, and then crashing back down to around $108. It has been moving sideways for so long that the 50, the 100 and the 200 moving averages started to pretty much go together horizontally. But this year the price finally broke out of those $120. So December 15th the 50-day moving average went over the other two, and then January 3rd 100-day moving average went over 201. The price jumped to 130 and next day to 135. Relative Strength Index wasn't overbought at 71, and the lines of the MACD were showing strength. There was a bit of a slowdown in the next few trading days, as on the 7th the Relative Strength Index dropped to 52, with the price going to the lows at $123 per share. share. But then last week we were spiking again, and as of Friday we closed over $140, with the relative strength index just under 70, and the 12-day moving average of the MACD going further out from the 26th one to the upper side. So the excitement is huge right now, and there is plenty of buying pressure available, but I would rather wait a bit for it to slow down, and the price moving closer to the new support of $125 per share. Now let us make a quick recap of what we found. So quarter 4 was a success, earnings increased from a year ago and beat analyst expectations. Also guidance for the next quarter is over analyst targets too. For the last 5 years revenues has been consistently increasing, and in the last 2 for each quarter, year-over-year quarterly growth was over 20%. Unfortunately, the stock is getting more expensive, as we now have the highest price-to-earnings ratio of the last 5 years. It seems that stock buybacks is not a focus for the company, as in the last 5 years, number of shares outstanding didn't change that much. With the stock price going higher and the payout ratio lagging behind, we currently have the worst dividend yield of the last 5 years. Analysts predict that on average in 1 year the stock should go up by 3.6%, and they predict an increase in earnings per share of 22.1%. A few smart money portfolios has been selling, but overall Superinvestors are net buyers of the stock. The chart shows that we just had 2 moving average crossovers, and with the price surging, the stock is very much overbought. So I would want to wait just a little bit before getting in. And I think the previous resistance could be the new support, so I'm looking at an entry price of at least $125 per share. So that was it for today. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. What do you think, is TSM a buy or a sell right now? Are you holding any shares in your portfolio? Share your stance on it in a comment below. If you're interested to know exactly when I buy or sell any stock, then consider memberships. By becoming a member you will get access to Discord, where I share my stock watch list and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. A while back I did an analysis on another semiconductor company, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side, thank you for watching and I will be seeing y'all in the next one.